Welcome back. Fed officials indicating 2024 will be the year of rate cuts. It's unclear, though, when those cuts might start. That's the big message from the December Fed minutes, the meeting minutes released this afternoon. Let's bring in Evercore's Roger Altman to discuss. Nice to see you again. Happy New Year.
Hey, Scott. How are you?
I'm good, thanks. So what's your takeaway on all of this? Are the markets and the Fed, are they too far apart?
No, I don't think so. First of all, the Fed statement is exactly what you would expect the Fed to have said if you or I or anybody else like us were responsible for that statement. Because the last thing the Fed can do is cut too soon and find out that inflation actually isn't under control. So they're sending a watch and wait message, just as they should, and it should be reassuring to investors, and I think generally it is. But beyond that, look, the economic outlook is remarkably good. We're seeing stunning data. Look at the latest data on personal income, on consumer spending, on consumer confidence. Look at the inflation data. Take the last 6 months on core PCE, annualize it, 1.9%. Remarkable. None of us 6 months ago or 12 months ago would have seen the growth data that we're seeing. Atlanta Fed tracker at 2.6 right now. Goldman Sachs just coming out, I think, a couple of hours ago, estimating high twos for the whole year on real growth, together with this inflation progress. As somebody said, it's the immaculate disinflation, and it's very positive.
But I mean, the Fed doesn't sound like it's ready to cut as many times as the market is betting it will. How much does that matter?
Not enormously. For example, we at Evercore ISI project that the Fed's first cut will come in the middle of the year, June, and that there'll be 5 cuts before the end of 2024. But whether it's 5 or it's 4 or it's 6, once the Fed begins to ease, it's going to continue to ease on a smooth, steady trajectory. And so whether there are 4 cuts in 2024 and 2 in 2025, or the reverse of that, I don't think it makes a lot of difference. Once the Fed starts to ease, it's going to continue to do so.
In other words, don't fight the Fed. Rules and reign supreme.
But the Fed, look, the Fed deserves a lot of credit. Yes, as was said a few minutes ago, it misjudged inflation at the beginning, and that was a big mistake. But it is engineering so far a remarkable outcome. As Powell himself said at his press conference, we think it's going to get harder, but so far it hasn't. I think that was the quote. And you have to give them credit, because to see 1.9% inflation and 2.5% real growth this late in the recovery, they should get a straight A for that.
What about the makeup of the market right now? It's like the clock struck midnight, right, figuratively and somewhat literally. And all of a sudden, mega cap stocks started to sell off. And, you know, the market seems to be going through a bit of a reshuffle. I look at it right now as I'm asking you this question, and we're about the lows of the day. Dow's down 250, Nasdaq's down more than 1%. Russell 2000, which surged to end 2023, is down almost 2.5%. What should we make of that? What do you think about it?
I don't think we should make much of it, Scott. After all, the market had a red-hot 6-week run going through the end of 2023. And I just think the market's taking a breather, as it so often does after a run like that. It's hard to say how good the 2024 outlook will be for stocks, but my instinct is the worst that happens is neutral, and probably somewhat better than that, just because the growth and inflation outlook is so good. Now, there are 2 big risks. One is war. One is the U.S. election. Very hard to tell how investors view those risks as the year goes on, in particular the Middle East risk, because we're awfully close to a wider war there, if you look at the events, for instance, of the past 24 hours. And that could be pretty negative. Hopefully we'll avoid it, but it's a big risk. And the election, it's going to be an ugly election, no matter how you think of it. And maybe investors will ignore it. and maybe they won't. But other than that, I think it's going to be a good year.